looked at the chart towards the ending of New York, I found out I just saw something and I know that PM session will not go back up there. So that was why I picked that trade. And immediately I picked the trade. That was when I sent it in the group. Immediately I picked the trade. That was when I sent it inside the group. So I don't know if any of you follow the trade, but immediately I picked the trade. That was when I sent it into the group, and I told you guys where I'm targeting. So if anybody has picked the trade, perhaps you should be in profit. So that's why I was asking you if you guys profited and everybody remained silent. So however, like I told you, these things I will do them once and not always, because if I should be doing it always, you won't learn. You won't learn at all. So you have to figure this thing out on your own. What I will do is I will always try to put you through and give you advice until not just advice, teach you how to read the price action until you get it right. So now looking at this chart, somebody might think I just chased this price, but I did not. I did not chase this price. Now look at this. This is a 4-hour fair value gap, and I set this thing up today. I wanted to pick this trade today from this point, but what happened was I did not even know when the price got to this point. I was sleeping. I was whether no, I was not sleeping. I told you I was going to avoid New York. I told you that I was going to avoid New York. Now the fact that I'm not trading these indices much, I did not remember to look at the charts at New York on indices, because I noticed that indices consolidated during the London session. So I knew that during the New York session in indices, there will be a significant move in the New York session. So, but the fact that I'm not using to trading indices, I was not even looking at my chart. So I missed this entry. Although this FVG, I marked it earlier this morning. Now, what made me sure that, what gave me the assurance that they were going to stop hunting to this fair value gap and give us a setup to go down? Now, first of all, like I told you, you want to read what price has done. If you look at this on the 4-hour, you will see that the market has grabbed this liquidity yesterday. It has grabbed the buy side liquidity, and if you look carefully, you will see that there is low resistance liquidity run on the sell side. We have this low, this low, this low. All these lows, they are failure swings. So these are low resistance liquidity run. Okay, before that, let me just go to the 1 hour. Are you guys following?
Yeah.
So let me just go to the 1 hour. Now, if you look at the 1 hour, you notice that this was Monday's low. This was Monday's low, um, Tuesday, Wednesday, and this is Thursday. And yesterday we had a shift in market structure. We had a shift in market structure here, this low. And this low left a fair value gap on the 4-hour. Now, let me explain what I mean by change in state of delivery again. Now, if you look at this market was going upward, right? The time when this particular candle closed below this candle, this white candle, then we have a change in state of delivery. And a change in state of delivery will only be significant if there is a liquidity grab in a higher time frame PDRA. Now, this liquidity was grabbed, and you see this candle, this next candle close. We have a body close below the opening of this previous candle. So this shows a state in change of delivery. So it's just like a market structure shift, but in respect to candle, not the structure. So this is a market, this is a change in state of delivery in the 4 hour. Now if you go to the 1 hour, you will see a market structure shift. Can you see it? That move on the 4 hour caused a market structure shift here. Can you see it? It caused what? A market structure shift here. So which means any retracement into that FVG, we're going to be looking for a reason to go lower. Now remember, I told you when you're looking for trade, you want to be looking for low resistance liquidity run. Now assuming all these have not been printed, all these things, they have not been printed. Now what can you see in the market? Let's zoom out again. Let's go back to the 4 hour. Let's zoom out. Now this place to this place, this from this candle represent the Asian session. Now this candle represent the New York and London into this candle, represent the London into New York. Now you can see that the Asian London, they somehow consolidated, right? Now what can you see? This is very clear in this picture. What can you see? You see that liquidity at the buy side has been grabbed, right? And every low here has been protected. No low has been grabbed, which means the liquidity are resting on the sell side. Now, since they've grabbed this buy side liquidity and there's change in state of delivery or market structure shift, it means that all this low resistance liquidity will be their targets. So now let's go back to the 1 hour. Now, this was Monday's low. This was Tuesday's low. Wednesday. Now that we have a shift in market structure here, when this was retracing back to the FVG, what was it doing? It formed this low resistance liquidity run. Can you see it? It formed this low resistance liquidity run. Now this is another indication that when the market is about to move, it will move through this low resistance liquidity run with speed. Now what did I tell you about timing? I told you that look for the high to form. If the high is going to form in New York, look for it to form around 15. Can you see that it's exactly 15 on the 1 hour? Look down. Can you see it? Are you guys with me? Hello guys, am I the only one here?
I can hear you. So we are here.
Make not answer me now. So you can see exactly 15, which is 2 p.m. our local time. So I told you if the high is going to form in New York, within that period, that is when you should be looking to enter the market. But it may not be exactly 15. It can be 15, 15:30 or 15:45. Now let's go to the 15 minutes and see what time, what was the exact time that that high was formed. You can see around 15:30. That was the time that that exact high was formed, 15:30, which is 2:30 p.m. So the high was formed at exactly 2:30 p.m. So that is when you should have entered this trade. So as I was not looking at the New York then, I did not pick this trade. So when I came back, now I saw this FVG. Now what happened? Monday low has already been raided. Monday's low has already been raided. Here, this low, it has already been raided when I was looking at this chart, but I noticed that this other low, this other one, this one here, was still intact. I noticed that this other one was still intact, so I did not panic. I just waited for the market to retrace, and I went to the 5-minute chart. Immediately I saw this liquidity grab into this FVG. That was when I picked the trade. And what else do we have? We have this low. We have this low. So it's a low resistance liquidity run also, because it's kind of equal low. So I entered this trade here and I closed immediately. It got to this point. This is where I closed it. So I closed one position and I leave the other one to be running, because I believe that this market is going to come down to this low here. That's what I believe. However, even though it did not get there, I've already set a break even. So now let's review GU. Are you guys with me?
Yes, sir. Yeah.
My network is a little bit
Yes, sir.
shaky. So now remember, I told you yesterday that this low, I'm expecting this low to be protected. That if this low is taken out, then I will look to start going bearish, right? I'll be looking for bearish price action if this low is taken out. And unfortunately, or should I say fortunately for us, this low was taken out. I was not expecting it though, because I was expecting, okay, I was looking at EU, not GU, sorry. This was the low. I was not expecting this low here to be taken out. But when it was done, look at this. I actually set this FVG and I wanted to, not so that like I wanted, I bought it. I will start getting this equal high here. I bought it, but I was taking out here. I was taking out here. I remember I told you I like setting my stop loss to be, I like being nimble with my stop loss. You can see this were my entry. $5, $6 loss on EU. So that's what I go when I was it, yeah, when I bought it, $5 and $6 loss on EU. Now, when I told you that if this low is taken out, it means there is change in trend, because we have a lot of low resistance liquidity here. We have this low, this low, this low. So they are low resistance liquidity run. Now, when there was this move, this particular move here, I was expecting this market to retrace at least to this breaker block, or at least to mitigate this high here. It did not. But when I was looking at GU was still far. Like GU has not done a significant move down. So that was why I picked GU, and I picked it in London session. Now let's go back to GU. But it's GU that I picked. So now what did I tell you about the high forming in London session? What did I say? What time did I say the high will form in London session?
Around 10, 15. Okay.
Yeah, between 10 to 10:45, right?
Yeah.
Now look at this. This was 10:15. Can you see? The high formed by 10:15. That was when the high formed. Now, when I saw this, where did I even pick this market again? I can't remember where I picked it. Oh, I think I picked it somewhere around here. I picked it somewhere around here. There was a change in state in delivery. I think I picked it in 5 minutes. Something like that. I picked it somewhere around here. So that's where I picked my first entry on GU today. So it was two entries. Immediately it took out this low. I closed the first one. Then the second one, it was at the end of this FVG. That was when I closed the second one. Now I avoided New York. Why did I avoid New York? Now I did not expect New York to even do this move at the early stage. I did not expect this move in New York at this early stage. So this was what I was expecting. This was what I was expecting actually. And why did I believe that this high will be protected? Because if you look at this, I picked this trade here today. Now let me divide the New York the sessions for you so that you understand what I'm saying. This is Asia. This is New York. This is the PM session. Now, from this point to this point is the Asian. From this side to this side is the London. Then from here to here is the New York. From this point to this point is the PM session. Now remember, when you are buying above, sorry, below the through the opening, and when you are selling what? Above the through the open. So you can see this is the through day opening. This is the through day open. This particular point. This is the through day open. So the market went above it, grab liquidity. So if you want to buy, you buy above the through day open. So that's where I bought. I bought somewhere around here, and that's it. Now this is the New York. Like, I was going to avoid the New York by all means because the London session trend, and to me, a significant low have been taken out in the London, which is this low. So this would be the next low, this equal low here, it will be the next. So I did not expect that to be taken out in New York. Actually, I did not expect it at all. I did not expect it at all. But however, this happened in New York. This happened in New York. Liquidity was grabbed here. I don't expect it to happen in New York. I expected New York to consolidate, but New York actually moved. But you can see it was a choppy price action. It moved, and at least it revenged that move again. And this will only happen because of what happened in London. London expanded, so we expect New York to be choppy, something like this. Give us equal move like this. Now, New York did this. This was the best move you could have in New York. In this first move here, and this first move grabbed that equal low by the left. It grabbed it. So picking the retracement will not be a nice trade. It will be just be going up and down because the move has already been sustained. Now every session has its own quarter. Now every day can be divided into 4 quarters. The 4 quarters are the Asian, the London, the New York AM session, and the New York PM session. And each session can be divided into 4 quarters. We have the first quarter, second quarter, and the third quarter. Now the second quarter is always the true session open. Now the true session open of New York is around 14:30. 14:30. This is the true open of the New York session, 14:30. So you bring it out, you mark it the true open of the New York session. Now what do we have here? Liquidity has been grabbed after the true open. Now the retracement creates this. When liquidity was grabbed, we have this fair value gap created, right? This FVG that was created here, which means price will come to that FVG, and we have a change in state of delivery with this particular candle, right? And this particular candle automatically becomes an order block. This particular candle here automatically becomes what? An order block. So it was at this retracement here, this order block, that was where I picked my trade. And if you look at the group chat, I sent the screenshot. Immediately I picked it. That was when I sent it into the group chat. So this was where I picked my second entry. Then I was targeting this particular low, but I was tired of waiting. I closed the trade. Then I closed the trade. So you see, now if you are trading as a day trader, you want to be buying below a true day open and you want to be selling above the true day open. Then for every session, you want to be buying below the true session open and you want to be buying and selling above the true session open. So that's how it is. This is just the review of the trade I picked today. This is how I reviewed them. So if you have any question, you can ask. If you don't have any question, then we can end the session. Any question?
Boss, no problem.
Yeah, I'm with you. Ask now.
No, but it's not like question actually. I just want to ask something.
You say it's not like question actually, but you want to ask something. I don't understand.
Not relating to this one, but it's concerning EU and GU.
Okay, what happened?
Okay, but since those significant low has been taken now, are we like in a form of retracement, or like the trend has changed entirely to a downtrend?
On EU,
Yes.
my network is very slow on the chat. I don't know why. So my belief is they are coming down into this FVG. Now, when they come to this
Okay.
FVG, one thing is I don't like seeing this kind of price action. I don't like seeing this kind of price action at all, where we have buy side rated and sell side rated. I like to see equal high. Are you getting it? I like to see equal
Yes.
high or equal low. But in this situation now, I wait for more information before I decide if I'm going to buy this FVG or if I'm going to use it as support and sell it downward to um, this low that's on the weekly. But if you go to the monthly, now it's somehow clear in the monthly that this sell side liquidity has been grabbed. Then perhaps they are going to attack this high here,
Buy side.
buy side. And if you look at it, it can also be that this market retraced into a fair value gap, and sometimes it happens like that. They will retest the fair value gap again and start coming back down. So for now, I think I can't say much about what the bias is going to be after the price has reached this FVG. So all I know is the target is this fair value gap here. That's the target. So when price has gotten to this FVG, then I will now wait to see what price will do before I can tell. No, the market is all about waiting for the market to build liquidity. Once the market has built enough liquidity, if you wait for the market to build enough liquidity, I'm already recording this class, so please don't record it. So if you wait for the market to build enough liquidity, when the market is ready to move, you will know where the market is going. You don't even need to even do top-down analysis. Just wait for the market. When the market is not clear, let it be. Just let it be. Let it keep on building that liquidity. When it's ready to move, you see the market moving flawlessly and you don't have to stress yourself. You get?
Yes, sir.
Just like this move. Now, when the market did this, it's very clear what the market, let's go to the 1 hour. At this point, we are not sure if the market was going to go back high here or if it's going lower. But we have a market structure shift here, which myself, I did not trust this market structure shifts. I did not. But however, we have the market structure shift and we have this other block. Let's say change in state of delivery, this particular white candle. When we have a close below it, there's a change in state of delivery. So automatically that candle becomes another block, right? So that candle becomes another block. You can see market retrace into it. Then we have another shift again in market structure. We have another shift in market structure. And this shift caused a fair value gap here, right? Now this fair value gap was the entry on the 1 hour. On the 15 minute, you might see another reason why you entered this trade. But anyway, all you just need to know is just know what the market did. Now look at this high here. Once you've seen this high, you know that okay, market has grabbed this liquidity. So it doesn't mean sometimes that when market grab a high, it will just do one small move, it will not go far. In a lower time frame, that move may be a very significant move, but in a higher time frame, if you go and see it, if you go and check, you just see that it's just a week. Are you guys getting it?
Yes, boss. Yes.
So that's just it, bro. Just wait for the market to build liquidity. Now, when this happened, when this when this low was broken, there is no any other thing that can justify the market going back up. There was nothing that could justify that this market was going back up. So all we just need to do is to look for opportunity to enter the market. Then if we were to trade London, now look at this. If we were to trade London, yes, so I taught you guys previously about balance price range, right? Where the range is choppy like this, going up and down, up and down, up and down. It means this range has been balanced. Now that this range has been balanced, we are not expecting the market to come back into this range. Although it can mitigate this low here, but we are not expecting the market to come into that range again because of what this range has been balanced already. If anything happens that the market comes back to this point, it's going higher. If the market comes into this FVG here, the market will be going higher. The FVG will not hold because this area here is already a balanced area. You see the market offer sell side, offer buy side, offer sell, buy side, offer sell, buy, sell, buy. You see the market just balanced the whole area here. There is no inefficiency in this area. So we're expecting the market to just create a fair value gap and just retrace. I was expecting the market to touch this one, but it was not doing it. Then when I checked in GU, I noticed GU was still at this point. If you look at the time, 10:15. Let's go back to EU and look for 10:15 on EU. You can see this was 10:15 on EU. So this was why I picked GU instead of EU. Can you see it? So that's it, guys. Any other question?
Yes, boss. Concerning that, you said that a change in state of delivery should happen in a higher time frame. Like there should be a sweep of liquidity in a higher time frame. Okay, sir. Noted. Thank you very much.
Any other question? So guys, if I'm going to summarize what I taught you guys again yesterday, first of all, when you're looking for price, you must wait for liquidity to be grabbed or wait for price to retrace into a high time frame PDRA, and that high time frame PDRA must show a liquidity grab in the appropriate lower time frame. I taught you how to blend those time frames together. So you must see a liquidity grab in those in higher time frames. So if you don't know how to pick liquidity grab, then look for your model. Your model can be retracement into FVG after a market structure shift, or retracement into a breakout block, or retracement into another block in premium or discount. Now, the only time you are not going to be looking for price to retrace back to premium or discount is when we have a balance range, like what we have on EU today. Balance range, then you look for a place where the price will retrace to, then you set up your target. So once you are picking a trade, you must have a target low hanging fruit. Like you must see a target. If you're not seeing anywhere you are targeting, then that trade is just like you are gambling. But if you are seeing a target, then it's because your entry is not as important as your stop loss and your profit target, because you can be good in picking trade. If you don't know where to exit your trade, either by stop loss or by take profit, then you are just gambling. You don't know what you are doing. So you should learn how to close trade, and you should learn how to set your stop loss. That's just it. Because these two things are what will ensure that you are profitable, not your entry. You can pick a turtle soup and you still lose that trade if you don't know how to manage your trade. So that's it, guys. If there's no any question, let's call it a day.
Okay, boss. Good night.